A significant event just happened in the world of precious metals, one that many have been anticipating for years. Silver, often called gold's little brother, has finally stepped into the spotlight. In May 2024, the price of silver surged, breaking through a critical resistance level that had held firm for over a decade. This wasn't just a minor fluctuation, it was a powerful statement. The metal surpassed a 13-year high, signaling a fundamental shift in market dynamics and investor sentiment. This breakout is more than just a number on a chart. It represents a potential turning point, a signal that the long period of consolidation may be over, and a new, more volatile and potentially much higher price era has begun. Wise investors are paying close attention to this development. For years, silver has been patiently waiting in the wings, its price suppressed and its true value overlooked by many mainstream financial analysts. While gold captured headlines, silver was quietly building a powerful case for a major revaluation. The recent price surge is the culmination of several powerful forces converging at once. It's a validation for those who understood silver's dual nature, not just as a monetary metal and a store of value, but as an indispensable industrial commodity. The breakout above $30 per ounce was the first major domino to fall. It cleared a path, technically and psychologically, for prices to explore much higher levels not seen since the dramatic peaks of 2011. Understanding why this moment is so critical requires looking beyond the daily noise of the market. It's about recognizing the macroeconomic landscape we are now navigating. We are in an era of persistent inflation, mounting geopolitical tensions, and a global move towards de-dollarization. In this environment, hard assets with intrinsic value like silver become increasingly attractive. They are a refuge from the erosion of purchasing power that affects fiat currencies. The recent price action is not an isolated event, it is a direct response to these growing global uncertainties. It suggests that a broader audience of investors is now waking up to the protective qualities of silver, seeking a safe harbor from the coming financial storm. The implications of this breakout are profound for both seasoned metals investors and those new to the space. It signals that the easy money phase of simply buying and holding might be transitioning into a more dynamic period. The path forward will likely be marked by significant volatility, with sharp advances and sudden pullbacks. However, the underlying trend appears to be firmly established. The forces driving silver higher are not fleeting, they are structural and long-term. This isn't a short-term trade, it is a strategic repositioning of capital in anticipation of major economic and monetary shifts. The journey has just begun, and the road ahead promises to be compelling. One of the most compelling arguments for a higher silver price is its indispensable role in modern industry. Unlike gold, whose demand is primarily for investment and jewelry, silver has a massive and growing industrial appetite. Approximately half of all silver consumed each year is used in industrial applications, making it a true commodity as well as a monetary metal. This industrial demand is not for frivolous items, it is for critical technologies that are shaping our future. From the smartphone in your pocket to the advanced electronics in modern vehicles, silver's unique properties of conductivity and durability make it essential. This demand is not optional, it is a core component of technological progress, and it is set to accelerate dramatically. The green energy transition is perhaps the single greatest driver of industrial silver demand. Solar panels, specifically photovoltaic cells, rely on silver paste to conduct electricity. As the world pivots away from fossil fuels and embraces renewable energy sources, the demand for solar installations is exploding. Every new solar panel manufactured adds to the global demand for physical silver. This is not a trend that is likely to reverse. Governments worldwide are mandating a shift to green energy, providing subsidies and setting ambitious targets for solar capacity. This creates a powerful, non-negotiable and long-term demand stream for silver that is completely disconnected from investment sentiment or financial market turmoil. Beyond solar power, silver's role in the automotive industry is expanding rapidly, especially with the rise of electric vehicles. A traditional internal combustion engine vehicle contains a small amount of silver, but an electric vehicle can contain significantly more due to its complex electronics, battery management systems, and advanced driver assistance features. As the global fleet of automobiles electrifies, the amount of silver required per vehicle will increase substantially. This, combined with the sheer volume of new cars produced each year, creates another massive and growing source of industrial consumption. The move towards smarter, more connected vehicles will only intensify this trend, embedding silver deeper into the manufacturing supply chain. The cumulative effect of these demand drivers cannot be overstated. We are witnessing a structural shift where silver is becoming a critical strategic metal for the 21st century economy. Its use in 5G technology, medical devices, water purification, and countless other applications adds further layers of demand. This industrial consumption is relentless, and importantly, much of the silver used is consumed in such small quantities per item that it is never recycled. It is effectively lost forever. This creates a constant drain on above-ground stockpiles, a factor that differentiates it significantly from gold, where most of the metal ever mined still exists in a recoverable form. While industrial demand for silver is surging, the supply side of the equation is telling a very different story. For several years now, the silver market has been in a state of structural deficit. This means that total demand, from industry, jewelry, and investment, is consistently outstripping the total supply from mine production and recycling. In 2023, the market saw one of the largest supply deficits ever recorded, and this trend is expected to continue. This is not a temporary imbalance, it is the result of long-term underinvestment in silver mining and exploration. Creating a new silver mine is a costly and time-consuming process, often taking a decade or more from discovery to first production. A key fact to understand about silver mining is that it is rarely a primary business. Over 70% of the world's silver is produced as a byproduct of mining for other metals, such as lead, zinc, copper, and gold. This means that the global silver supply is not very responsive to changes in the silver price. Even if silver prices were to double overnight, mining companies cannot simply flip a switch to produce more. Their production schedules are dictated by the economics of the primary metal they are extracting. This inelasticity of supply is a critical component of the bullish thesis. As demand continues its relentless climb, the mining industry will struggle to keep pace, widening the supply-demand gap. Furthermore, the existing sources of silver are facing significant challenges. The grades of ore at major silver mines around the world are declining. This means that mining companies have to process more rock to extract the same amount of silver, which increases their production costs and energy consumption. Geopolitical instability in key silver-producing regions, such as Mexico and Peru, adds another layer of risk to the supply chain. Labor strikes, changes in tax laws, and environmental regulations can all disrupt production with little warning. These factors combine to create a fragile supply environment at the precise moment when demand is set to enter a period of unprecedented growth. The result of this dynamic is a steady drawdown of available above-ground inventories. The visible stockpiles held in vaults in London and New York, which are tracked by exchanges like the COMEX and the London Bullion Market Association, have been declining. While there is still a significant amount of silver in the world, the portion that is readily available for delivery at the current price is shrinking. As this pool of available metal dwindles, it sets the stage for a potential supply squeeze. A situation could arise where there is simply not enough physical silver to meet delivery obligations, which would have an explosive effect on the price. This is the scenario that many savvy investors are positioning for. The value of silver, like all commodities, is intricately linked to the health of the US dollar. Since precious metals are priced in dollars globally, a weaker dollar generally means a higher silver price. When the dollar loses purchasing power, it takes more dollars to buy the same ounce of silver, pushing its price up. We are currently in an environment where the long-term outlook for the dollar is under serious threat. The United States is grappling with unprecedented levels of national debt, persistent budget deficits, and a Federal Reserve that has painted itself into a corner. Any move towards lower interest rates to stimulate the economy or manage the debt burden will inevitably weaken the dollar and provide a powerful tailwind for silver. Beyond the dollar's weakness, the broader economic landscape is fraught with risk. The threat of a recession looms over major economies, while inflation has proven to be far stickier than central bankers initially predicted. This combination of slowing growth and rising prices, known as stagflation, is a historically bullish environment for precious metals. During such periods, traditional financial assets like stocks and bonds tend to perform poorly. Investors naturally seek out safe haven assets that can preserve wealth when paper assets are failing. Silver, with its long history as a monetary metal, serves this purpose perfectly. It acts as a form of financial insurance against systemic risk and currency debasement. Geopolitical instability is another major factor that enhances silver's appeal. We live in an increasingly fractured world, with conflicts and tensions rising in multiple regions. From the ongoing war in Ukraine to the strategic competition with China, the global order is shifting. This uncertainty drives a flight to safety. Nations are also looking to diversify their reserves away from the US dollar, a process known as de-dollarization. Central banks are buying gold at a record pace, and while they don't typically announce silver purchases, the same logic applies. Silver is a tangible, universally recognized store of value that exists outside the control of any single government or central bank, making it an attractive asset in a multipolar world. Finally, there is the issue of trust. Confidence in governments, central banks, and the entire fiat currency system is eroding. People are beginning to realize that their savings are being silently confiscated through inflation. They see politicians making promises that are fiscally impossible to keep. This loss of faith is a powerful, though unquantifiable driver for precious metals. It's a return to first principles, a recognition that true wealth is not an entry in a digital ledger, but something real and tangible that you can hold in your hand. Silver is accessible wealth protection for the average person, a way to opt out of a failing system and preserve purchasing power for the future. For those who follow the silver market, price charts tell a story of struggle and potential. To understand this story, it's helpful to know two basic terms: support and resistance. Support is a price level where buying interest is typically strong enough to stop a price from falling further. Think of it as a floor. Resistance is the opposite. It's a price level where selling pressure is strong enough to stop a price from rising higher, acting like a ceiling. When a price breaks through a major resistance level, as silver recently did, it's a very bullish signal. It means the old ceiling has become a new floor, and the price is free to seek higher levels. The most important level that was recently conquered was the resistance around $30 per ounce. This level had capped every rally attempt for over a decade. Now that silver is trading above it, this $30 mark has transformed into a critical support level. For traders and investors, holding above this price is psychologically and technically significant. It confirms the validity of the breakout and suggests that the new uptrend is real. Any pullback or correction in the price will likely find strong buying interest near this $30 floor. As long as silver remains above this level, the outlook remains overwhelmingly positive, and it serves as a solid foundation for the next leg up. Looking higher, the next major areas of resistance for silver are clustered around several key psychological and historical price points. The first significant hurdle lies near the $39 to $40 range. This area represents a point of consolidation from the 2011 price peak and will likely attract some profit-taking. A decisive break above $40 would be another massive bullish signal, likely triggering a new wave of buying. Beyond that, the $42 level is another point to watch. If silver can clear these hurdles, the path becomes much clearer towards the ultimate target for many investors, the all-time high just shy of $50 per ounce, set back in 2011. Each of these price levels acts as a milestone on silver's journey. Crossing each one builds momentum and attracts more attention to the market. A successful move above $40 would likely cause a frenzy of media coverage, drawing in retail investors who were previously on the sidelines. A move towards $50 would be a headline event, signaling a full-blown bull market. Conversely, a failure to break these resistance levels, or a fall back below the $30 support, would indicate that the market needs more time to consolidate before moving higher. These levels are not magic, but they represent the collective psychology of the market and provide a valuable roadmap for investors. In a bullish scenario, the current momentum in the silver market continues to build, driven by the powerful fundamental factors already in place. The breakout above the $30 resistance level acts as a launchpad, attracting a wave of new investment capital from hedge funds, institutional investors, and the general public. As the price steadily climbs, it begins to feed on itself. The financial media starts covering the silver surge more extensively, creating a feedback loop of positive sentiment. This increased attention helps silver break free from its correlation with gold and begin to outperform its precious metal counterpart, causing the gold-to-silver ratio to fall dramatically. The journey towards the all-time high of $50 would likely happen in stages. The first major test, as discussed, would be clearing the resistance zone between $39 and $42. In a strong bull market, any pullbacks from these levels would be shallow and short-lived, seen by eager buyers as an opportunity to add to their positions. Once this area is decisively breached, the psychological barrier of the $50 peak comes into focus. A move towards this level would likely accelerate as short sellers are forced to cover their positions, adding fuel to the fire. Reaching and surpassing the 2011 high would be a monumental event, signaling that silver has entered a new paradigm. What happens after $50 is a matter of speculation, but many analysts believe it would open the door to true price discovery. If the 2011 high of nearly $50 were adjusted for inflation since then, it would be equivalent to over $70 in today's money. Some projections, based on the historical gold-to-silver ratio or the amount of currency in circulation, call for prices well over $100 per ounce. In this scenario, the industrial demand story becomes even more critical. Manufacturers who need silver to produce solar panels and EVs would be forced to pay whatever price the market demands, as there are no viable substitutes for silver's unique properties in many key applications. This ultimate bullish outcome would be the culmination of the supply deficit, relentless industrial demand, and a flight from failing fiat currencies. It would represent a fundamental repricing of silver not just as an industrial metal, but as a critical monetary asset in a world losing faith in paper money. This isn't just a fantasy, it's a plausible outcome based on the convergence of powerful long-term trends. For investors who have the foresight to position themselves now, the potential rewards could be life-changing. The journey will be volatile, but the destination could make the turbulence well worth it. While the case for silver is incredibly strong, no investment moves up in a straight line. It is crucial for investors to understand the potential risks and the factors that could cause a temporary or even a significant price pullback. The silver market is notoriously volatile, and sharp corrections are a normal part of any bull market. One of the primary risks is a sudden and unexpected strengthening of the US dollar. If the Federal Reserve were to pivot to a more aggressive, hawkish stance and raise interest rates unexpectedly to combat inflation, it could provide a short-term boost to the dollar and put downward pressure on all commodity prices, including silver. Another potential headwind could come from the demand side. While the long-term outlook for industrial demand is robust, a severe global recession could temporarily dampen it. If economic activity slows dramatically, manufacturing output would decrease, leading to a short-term reduction in the need for industrial metals. This could cause silver prices to pull back as the market reevaluates near-term consumption forecasts. This would likely be a temporary setback rather than a long-term trend reversal, but it could be significant enough to shake out investors who are not prepared for volatility or who have over-leveraged their positions. The paper market for silver, particularly the COMEX futures exchange, also presents a risk. In the past, large commercial banks have been accused of using massive short positions in the paper market to suppress the price of physical silver. While recent price action suggests their control may be waning, they could still attempt to orchestrate a takedown to trigger stop-loss orders and force weaker hands to sell. A sudden flood of paper contracts onto the market could cause a rapid price drop, even if the physical market remains tight. Prudent investors should be aware of this dynamic and view such engineered pullbacks as potential buying opportunities rather than a reason to panic. Finally, investor sentiment itself can be a source of risk. After a strong run-up in price, it is natural for some investors to take profits, creating selling pressure. If a correction begins, it can sometimes trigger a cascade of selling as fear takes over. It is important to remember that the fundamental story for silver is a long-term one. Trying to time the market perfectly is a fool's errand. Instead, investors should have a clear strategy, understand that pullbacks to key support levels like $30 are possible, and maintain a long-term perspective focused on the powerful underlying trends that are driving this bull market. When analyzing any investment, it is wise to consider what seasoned experts and market analysts are forecasting. In the case of silver, the consensus among many well-respected figures in the precious metals space is overwhelmingly bullish. Surveys conducted among metals analysts and industry professionals consistently point to higher prices ahead. For instance, the London Bullion Market Association annual survey often reflects a strong belief in silver's potential to outperform other assets. Many experts who correctly predicted gold's recent rise are now pointing to silver as the next major opportunity, citing its relative undervaluation and explosive potential. Forecasts for silver's future price vary, but many credible analysts see a path to the $50 all-time high as not only possible, but likely within the next 1 to 2 years. Some go even further. Based on historical valuation metrics, such as the gold-to-silver ratio, a return to the historical average would imply a silver price well above $100 per ounce, even at current gold prices. Others who focus on the monetary aspect and the expansion of the money supply arrive at even more dramatic 3-digit price targets. While these higher forecasts may seem extreme, they are based on logical analysis of the unprecedented economic conditions we face today. The reasoning behind these expert opinions is rooted in the convergence of the powerful trends we've discussed. They see the non-negotiable industrial demand from the green energy and technology sectors colliding with a constrained and fragile supply chain. They see the ongoing debasement of global currencies led by the US dollar as a catalyst that will force investors to seek the safety of hard assets. They recognize that silver is unique, possessing the monetary safe haven qualities of gold, while also having the powerful demand drivers of a critical industrial commodity. This dual nature is what gives it such explosive upside potential. What is perhaps most compelling is that this bullish sentiment is no longer confined to a small group of silver bugs. Major financial institutions and wealth managers are beginning to take notice. They are starting to recommend strategic allocations to precious metals, including silver, as a necessary hedge against inflation and systemic risk. When this smart money begins to move into a relatively small market like silver, the impact on the price can be dramatic. The fact that mainstream analysts are now echoing the arguments that precious metals advocates have been making for years is a strong sign that this bull market is real and has a long way to run. We stand at a pivotal moment for the silver market. The recent breakout above a 13-year resistance level was not a random event. It was a signal flare, illuminating a path forged by a powerful convergence of fundamental forces. The case for a new secular bull market in silver is built on a simple but unshakable foundation. Demand is set to explode while supply is constrained. This is the most basic and powerful recipe for higher prices in any market, and in silver the ingredients are all present. The green energy revolution, the electrification of vehicles, and our reliance on advanced electronics have transformed silver into a strategic metal for the 21st century, ensuring a relentless and growing industrial demand. Simultaneously, the world's economic and monetary systems are showing clear signs of stress. Decades of fiscal irresponsibility have led to mountains of unpayable debt and the inevitable debasement of fiat currencies. In this environment, silver's ancient role as a store of value and a monetary metal is being rediscovered. It offers protection from inflation, a safe harbor from geopolitical storms, and an alternative to a financial system built on a foundation of eroding trust. This dual identity, as both an indispensable industrial commodity and a timeless monetary asset, is what makes silver's investment case so uniquely compelling today on July 24, 2025. However, investors must proceed with wisdom and a clear strategy. The path to higher prices will not be a smooth, straight line. The silver market is known for its volatility, and sharp pullbacks should be expected and even welcomed as buying opportunities. It is essential to avoid the use of excessive leverage and to maintain a long-term perspective. The powerful trends driving this market will not play out overnight. The key is to establish a position in physical silver or a reputable silver-backed investment vehicle and have the patience to allow the fundamental story to unfold over the coming months and years. In conclusion, the scales are heavily tilted in silver's favor. The combination of a structural supply deficit, unstoppable industrial demand, and a decaying global financial system creates a perfect storm for a significant revaluation of the metal. The recent price action confirms that the market is beginning to awaken to this reality. For those seeking to preserve their wealth and potentially achieve spectacular returns in an uncertain world, silver presents one of the most asymmetric investment opportunities available today. Its future is not just shiny, it is brilliant.